The first of this category is E, which stands for environment. And this is a very special topic for me, and I hope it is for each of you as well. You might ask the question, though, how does environment actually affect you in your job? You might be in the risk part of the business, or collections, or you might be dealing with customer servicing or digital engagement. How does this actually connect with you? As Nikhil pointed out, though, there's most likely, because most companies have some policy of what they're going to be doing, and they're sharing this back with their shareholders, the stakeholders of their organizations. That commitment that they're making on behalf of your business is a key part of what's driving this sort of energy behind the ESG commitment in the world. Many banks are making this commitment. The first one that I'm going to pick on here, just to single this out, is Bradesco, because you've heard from them earlier today. So coming right off of their website, I'm going to read it and make sure I get it right. Our purpose is to contribute to the sustainable development of Brazil, to support all Brazilians in achieving their goal, offering diversified and accessible financial and insurance solutions. We are committed to increasingly improving the management of social and environmental factors in our business and in supporting the market in the same direction, helping our customers in the transition to a less carbon-intensive economy, more resilient to the climate change impacts. Powerful statements, but they're not just a side project for Bradesco. They mean it. They're committed to it. It's an integral part of their mission. It's part of the manifestation of their digital transformation initiative, which in part FICO platform is helping with. As Nikhil said, our FICO platform is used to help with credit risk. It's used to help with digital engagement, but it's also used to help with ESG goals. It's becoming increasingly more relevant in the market, and the regulators are zeroing in on this. An organization by the name of COP26, which stands for Committee of the Participants, essentially a group of organizations come together. At that conference, they made the statement that we need to get to net zero by the middle of the century. That's the stated goal. They go on to actually say that the financial decisions that are being made need to account for these environmental and climate impacts. To do that, they've clearly stated that any bank, any insurer, or any investor or other financial firms needs to have some kind of policy around how they manage their investments to get to this net zero state. Those are very impactful statements. How do they manifest themselves? How does that come down? These kinds of statements are coming out all over the world. And let me read a couple of them. Many of the central banks are actually starting to say that you need to add to your stress testing considerations for climate change. The Fed Reserve in the US has recently appointed a new supervision of the Climate Committee. UK FCA has published papers soliciting input from lenders and investors of how the business model needs to change to account for this, working with the Bank of England to create the Climate Risk Forum. The European Bank Authority, EBA, on loan originations guideline went live in June, mandating phased integration with ESG risk drivers. The Monetary Association of Singapore, MAS, has a Green Finance Action Plan. The Australian Prudential Regulation Authority, APRA, is working on vulnerability assessments. The Banco Central de Brazil, BCB, is also implementing new climate regulations in the regions and the institutions in which they do business to account for droughts, floods, forest fires, and other climate-related risks. This is just a sampling of what's coming. So if this isn't something that you've seen before, you're about to see it. We've seen it coming for a little bit, and we actually see it now as an active part of the partnership that we take with organizations. And so the question is, how can the platform that you've learned all about this week and what FICO does help make green decisions? So one of the ways that this happens is in our optimization space. We've been a leader in this space for well over 20 years. And there's many organizations that use optimization, like the supply chain management. This helps reduce carbon footprint by finding optimal schedules and ways of getting things there. Traxion is a leader in mobility logistics in Mexico. They've recently used transportation optimization technology in order to reduce the number of vehicles that they have out there, save on fuel, cut down on emissions, and wear and tear on the fleet. So the initial rollout of this work was actually already saving 2.2 million kilometers of drive miles, $500,000 in costs, and they've only implemented 11% of the solution. By the time they're done rolling out the solution, they will have reduced their empty trips by 40%. They will have saved $5 million and 16,000 tons of emission. 16,000 tons. Ørsted is another example. Ørsted actually is in the business of building wind farms, except they put them offshore in the ocean. And so they have a very specific way that they need to route the power cables back in. They can't cross one another. And the time to do that is very extensive, and they actually use the optimization to cut down the time, and therefore rolling out more windmills faster than they could before. I want to recall back to a previous FICO world where I heard that if all the stars in the universe were counted, the permutations that they have to look at are bigger than those stars. Just to put it into perspective. It's not just energy firms, though. Those are obvious. There's also organizations that are using it, banking organizations that are using it to control their own jet fleet for their executives. But something a little closer to home is Hoist. Hoist is in the debt collection business. And they previously had 14 different systems for how they actually brought together their debt collection. By bringing that together and digitizing it, they were able to save 442 tons of carbon for every 10% of the customers that they put on digital collection, or 97% carbon-free for each digital customer resolution. They won an award for this in the Credit Excellence in 2021 for their reduction of carbon footprint. So a little bit ago, I asked why this should matter to you, right? And why is your business committed to it? And I also mentioned that it's a personal thing for me. Another group of people who care about this are my kids. They're aged 15 to 25, and they have a firm commitment. They will not bank with any organization that cannot handle all of their needs digitally, full stop. My oldest daughter actually switched her bank 5 times until she found the right one that could actually service her. She also cares, as all of them do, what the commitment of the organization they bank with is to the environment. And they will not bank with them unless there is a firm commitment and action plan in place. I see some of you nodding. You probably have kids of your own that are in the same spot. They are the future of our business. They are our future customers. We need to care. It is also personal. It's a commitment that we make. As a family, we have a composting machine in the back. We take extra care not to use plastic bags when going to the grocery store. These are just some of the things that they've employed, and they want that on everything that they do in the market or in the business world themselves, both from the organizations they work for and the organizations that they bank or interact with in their life. So with that note, I think it's actually time to move past the environment discussion and move on to the social discussion. And to that end, I'd like to invite Sally Taylor-Shaw.